Welcome to the Deep Dive, where we plunge headfirst into the exhilarating, often perplexing world of crypto. It's truly fascinating how quickly things can shift, isn't it?
Yeah.
One minute you're looking at dips, the next it's new records, sometimes in the same day.
It really is. It's less a shift, more like constant motion. Shows you how dynamic digital assets are. And yeah, for anyone trying to keep up, it's a lot. Making sense of it all is the real challenge.
Absolutely. And that's exactly what we're trying to do here today. We're taking a deep dive into a market update from the end of August 2025. We'll cover price moves for Bitcoin, Ethereum, a really big milestone for stablecoins, and also these interesting plans from a mining firm linked to the Trumps that's aiming for a public listing.
Right. Our source for this is a pretty detailed update from the Investing News Network, published August 27th, looking back at Friday, August 29th. And it gives this, well, almost contradictory snapshot of where the market was.
Yeah, exactly. So our goal is simple. Pull out the key nuggets for you, give you that shortcut to understanding the trends, the surprises, the bigger picture, those aha moments, but without getting buried in data. Okay, let's unpack this. It was a truly dynamic week. Some major coins took a hit, but other parts of the ecosystem hitting all-time highs. And you've got some big names stepping more into the spotlight too. Lots to consider. Let's dive in.
Okay, so first thing that jumps out from the INN report is the volatility on Friday, August 29th. Sharp moves. We saw a pretty notable dip across several major cryptos. Seems like there was some nervousness in the air.
Right. Let's start with the big one, Bitcoin. The report had around, US $108,747, down 3.3% in 24 hours. It dipped as low as US $108,198 after hitting a high near US $112,652. That slipped under US $110,000. That seemed to get noticed. What's the deal with that specific price point, and what else was driving the volatility according to the report?
Well, that US $110,000 level, yeah, it definitely caused ripples. But it wasn't just the price itself. The INN report pointed out that liquidations actually doubled. That suggests leverage positions were unwinding fast, often a sign of, well, panic. Plus, you had the Fed's preferred inflation gauge showing price pressures sticking around, which usually makes risk assets like crypto nervous. Combine that with analysts seeing a potential risk pattern in Bitcoin's chart, and yeah, those whispers about maybe heading towards bear market territory got louder.
Bear market territory. Definitely not words you want to hear. But this market swings so fast. How reliable are those immediate signals? Did the report offer any counterpoints or reasons maybe not to panic just yet?
That's the key question, isn't it? The report didn't really offer strong counter-arguments for that specific moment, mostly because those factors, the doubled liquidations, the inflation signals, they're pretty concrete things. Bitcoin's bounced back before, obviously, but the mix of those events signaled genuine unease. It was more about flagging acute pressure points right then, not necessarily calling a long-term bear market. Caution seemed key.
Okay, got it. And then, as if that wasn't enough, there was this dormant Bitcoin whale waking up. The same one that bought, US $2.5 billion in Ethereum earlier in the month, and then moved another US $1.1 billion on Friday. That sounds huge.
Oh, it is. Huge. When these big holders, these whales, make sudden large moves, it can definitely amplify market feeling, especially if the market's already a bit jittery. It's sort of a classic supply pressure meets nervous market scenario. One big transaction can send tremors,
Right. It's not just the amount, but the timing. Shows how much influence a few big players can still have.
Exactly.
And Bitcoin wasn't the only one sliding. ETH also dropped, down to US $4,395.28, about 3.2% down in the same period. High of around $4,511, a low near $4,280. So definitely not just a Bitcoin issue.
Not at all. And that parallel movement, when the two biggest cryptos move together like that, it usually signals something broader is happening. It kind of backs up the idea this wasn't just noise for one asset, but reflected a wider market sentiment, validated those correction fears a bit.
When the big two move together, the rest often follow.
Pretty much.
And looking at the other coins, the report confirms that. Solana down 2.4% to about US $204.82. XRP was at US $2.94, which was its low for the day, down 4.4%. SUI hit US $3.30, down 4.3%. Cardano, ADA, at US 0.8201, down 3.8%. So yeah, a pretty widespread pullback across the major altcoins they highlighted.
It really was. But here's where it gets really interesting, that contrast you mentioned earlier. While all these foundational cryptos and big alts were dipping, signaling that unease, another part of the digital asset world was hitting an all-time high. Stablecoins.
Okay, this is fascinating. The total supply of stablecoins hit US $282.8 billion, according to the Falama data, crossing a US $283 billion record on that Friday. That's huge, up 128% since January. How does that happen? How can stablecoins surge like that while the rest of the market's under pressure? What's driving it?
Well, if we try to connect the dots here, it really shows that dual narrative playing out. The Investing News Network points to stronger demand for dollar-pegged tokens, which makes sense, right? People look for safety when things get volatile. But crucially, they also highlighted fresh regulatory clarity in the U.S. as a major driver. That regulatory piece seems key.
Ah, right. The Genius Act.
Yeah.
That sounds like a big deal for this sector. But you know how regulation can be in new markets? Did the report hint at any potential downsides? Or unintended consequences, maybe? Or was it all positive?
That's a really good point. The report definitely framed the Genius Act as a positive, a growth catalyst, clear federal rules, less uncertainty, especially for institutional money. That's the upside. It's seen as a really critical step for wider adoption. The sort of implicit challenge, though, with any new rules in a space that moves this fast is always flexibility. Does it allow innovation to continue? Does it accidentally favor some players? We don't know the long-term effects yet, but for now, yeah, the market reaction seems overwhelmingly positive.
Okay. So what does this imply for stablecoins themselves? It sounds like they're becoming more than just a place to park cash during dips or just for trading.
Exactly. It feels like a real shift in their function. The report talked about them serving as a sophisticated distribution channel for U.S. dollars. That's profound. It suggests they're moving past just being crypto market tools and becoming part of the actual plumbing of global finance, maybe even democratizing dollar access for billions. They're being used for cross-border payments, on-chain settlements. Their utility is expanding way beyond just crypto trading.
Wow.
It points to real maturity, deeper integration, a quiet revolution maybe that could impact traditional banking.
That is a huge development. It really shows the different evolutionary speeds within crypto. And speaking of evolution and integration with traditional structures, that politically linked story the report mentioned, American Bitcoin, the Trump-linked mining firm getting ready for a public listing.
Yes, that development really highlights this intersection of traditional finance, politics, and crypto. American Bitcoin, with Eric Trump and Donald Trump Jr. involved as backers, they're prepping for a Nasdaq debut in September. And they've already raised hefty US $220 million.
That is substantial. And this came after merging with Griffin Digital Mining, right? So what's the ownership look like now? What's their game plan?
Hut 8 is the majority owner, controlling about 80%. The Trump brothers are expected to hold around 19% collectively. The CEO, Asher Janut, has said their goal is to be one of the biggest U.S. miners. They've already got big names involved, like the Winklevoss twins investing. So it signals a serious, well-funded move into a competitive space. They clearly plan to scale up fast.
Right, not just talk. They're actually building. The report said they added 215 BTC to their balance sheet by June, with Bitcoin around US $112,000 that week. That's like US $24 million right there. Solid foundation for an IPO.
It is. Puts their ambition in perspective. And Hut 8's own stock, their majority owner, has rallied nicely this year too, about 29%. Shows some market confidence there. And just for context, if American Bitcoin were listed today, it'd be among the top 30 public companies holding Bitcoin in the U.S. So yeah, not a minor player. Significant new entrant.
And the political angle got even more interesting, didn't it? The report mentioned Eric Trump speaking at a conference in Hong Kong, BTC Asia. He apparently praised China's influence on digital assets, saying the U.S. and Beijing were leading the way. Credited the Middle East, too. That's quite a perspective, emphasizing Bitcoin uniting people across borders. It really does bring politics right into the crypto mainstream, doesn't it?
His remarks definitely show a fascinating shift in tone, talking collaboration in digital assets, which is, well, nuanced given global politics. He also talked about the previous U.S. administration, suggesting they pushed digital asset policy forward quickly, faster than the decade before, and described the U.S. as winning the digital revolution. With backing from Wall Street, sovereign wealth funds, retirement investors, it's a clear signal, isn't it? Crypto isn't just fringe anymore. It's part of national, even global economic strategy, attracting serious traditional power brokers.
Wow. It really is quite a landscape unfolding. You've got market dips, concerning indicators, then stablecoins hitting these incredible highs, and now politically connected firms making big moves onto the Nasdaq. It's clear the crypto world is anything but static.
Absolutely. It's multifaceted, increasingly complex, and these recent events just underline that. The old rules, constantly being rewritten, new forces are definitely in play.
Okay, so let's quickly recap as we wrap up this deep dive. We saw those notable dips in Bitcoin and other major altcoins. Had some worrying signs like double liquidations, inflation fears hanging around. But then, the total opposite. Stablecoins surging to a record high. Driven by demand, sure, but also, importantly, by clearer regulations like the Genius Act. And finally, this high-profile plan for American Bitcoin, the firm with those political ties, aiming for a Nasdaq listing with significant backing.
And if you connect those dots, what's really striking is that dual narrative playing out at the same time. On one side, you've got that classic crypto volatility, especially in the big names like Bitcoin and Ethereum, a reminder of the risks involved. But on the other side, a clear accelerating trend, more integration, more regulation, more institutional adoption. It's fundamentally pushing the market in new directions, maybe more stable ones long term. The stablecoin boom, that politically backed IPO, they're perfect examples of this maturation, this normalization within the wider financial world.
It's a really compelling contrast. So it leaves us with a thought for you, the listener. As this crypto landscape keeps maturing, influenced by everything from huge whale movements to federal laws, even presidential family endorsements, how might our actual understanding of digital assets change, both in terms of risk and opportunity? What could all this mean for crypto's role in the global economy, especially as it gets more tangled up with traditional power structures? Something to think about.